Whether you're looking to buy a home or you're an existing homeowner who wants to take advantage of pockets of lower rates, or you're a real estate agent who wants to help their clients get the best possible deal and buy the home of their dreams, this is the podcast for you. So today we're going to be talking about how to take advantage of dips in the marketplace when there's volatility and opportunity. I'm here with my bud, Lindsay Clark. How you doing, Lindsay?
Good. Thanks for having me, Joe.
So, this has been a hot topic. Here we are in the middle of August. I'm probably not supposed to date it because, who knows when people are watching this.
Right.
But here we are in the middle of August, and last about a week ago or so, we had a dip in the rates, right?
Mm-hmm.
And we had the Fed meeting on Wednesday. We had jobs report come out on a Thursday,
Yeah.
and the jobs report was way worse than anticipated. Rates took a severe, dip, and then there's a pocket of opportunity, and then on Monday or Tuesday, the rates trickled up a little bit, right?
Mm-hmm. It was eerily similar to I think it was around February
February,
time frame. And I just remember everybody talking about the volatility in the market at that point in time. How is that similar to what we're experiencing right now?
Yeah, and back in February, the same thing. We had some data that came out that was positive for better rates, and there's a very swift decrease in the interest rates. We were able to refinance people with either it was a VA loans or conventional loans that had higher interest rates. We were able to refinance them into lower interest rates and help them in that pocket. But they were ready to do so. They were ready to go because we had talked to them and said, "Hey, when this comes, you got to be ready."
Sure.
Yeah.
What does that mean? Because I know that a lot of people saw that. Now they've experienced it, so they've got
Right.
something to kind of compare and contrast to. But how do they get ready for when this happens again so they don't feel stuck or like, okay, what's my next move?
Well, the biggest challenge is that, the salespeople are the one that are calling their past client database, right?
Sure.
And they're saying, "Oh my God, today the rates are low. I can lock you in today at like this percentage rate."
Mass hysteria.
Yeah, it's like I can get this rate for you. I can save you all this money. And meanwhile, like the client is sitting on the other end of the phone going like, "Is this just a pushy sales tactic?
Yeah.
Is it really the right time to refinance?"
Mhm.
And they're questioning it. And by the time they make up their mind 2 days later and they say, "You know what, we're ready to go," you're like, "I'm sorry, the rates went back up. There's
It's
nothing I can do now."
it's wild that it changes that quickly too.
It can.
Yeah.
You have these, I call them pockets of opportunity.
Mhm.
And, as rates are going in a direction, whether that be up or down, rates don't just go straight up typically, or they don't go straight down typically. There's pockets of opportunity. It's called, looking at markets for 30 years and, crypto, whether it's crypto, bonds, stocks, there's a thing called price action. And not to get too geeky or nerdy,
Mhm.
but price action, basically, rates don't go straight up or down. Let's say rates are on their way down. Well, they might go to a point where people sell off and then it goes down. And then there's a point where people buy in and then it goes back up. And you have this volatility going up and down and up and down, trending in one direction. So that means that, today there might be an opportunity because the rates, there's a big decrease in the rates. Well, then people come in, the market changes and it goes back up. So if you're not ready for that little dip, you're going to miss opportunity.
Makes sense.
And I know you can't time the market.
I was just going to say, are there any indicators? I think of like surfing, right? Like you see a swell coming so you can get ready for it. Are there any indicators in the finance world that you can say, okay, I feel like a dip's about to happen?
Well, there are, but information isn't perfect in the finance world, but information is good. And so that, I think it was a Thursday or a Friday when that jobs report came out, or it might have been a Wednesday. I think it was the day after the Fed meeting, so it was probably a Thursday. That jobs report came out. Well, the second that jobs report came out, it signaled, for people to, not to get, again, too technical, but to buy bonds, which decreases the rate.
Right.
Because the data, the unemployment came in way worse than expected. It was supposed to be 4.1%. It came in at 4.3. The corporate earnings came in worse than expected. It was supposed to come in at 0.3 and it came in at 0.2, right? And then we had new farm roll or NFP non-farm payrolls. It was supposed to be 175,000. It came in at 114,000. So all this data was like bad, worse, and everyone ran flight to quality to buy bonds. And when you buy the bond, the price of the bond goes out, which actually decreases the yield or the interest rate.
Mm-hmm.
So bad economy means better interest rates, right?
Right.
So the challenge is that is the indicator, and it worked perfectly. Right when that happened, the rates went down. right? But there's not a lot of window of opportunity because then on Monday, other data came out that was a little bit conflicting. It was the manufacturing data that came out a little better than expected. So the market started to level back out. So there's an opportunity there. And if you weren't ready for that opportunity, how many people are out there wanting to refinance their house?
I think about, back when interest rates were in the twos.
Right.
And man, by the time I was ready, they were back up to the fives and then to the sixes and then to the sevens. So it kind of reminds me of that. It's like shoulda, coulda, woulda in those situations. So going forward, I think the best advice that you could get sounds like be from your loan officer, having those constant lines of communication open so that when it's ready to strike or when the time is ready to strike, you can.
Right. Typically people say, when the rates go down, then I'll get ready.
Yeah.
Well, if you wait too long, you're going to miss it. And a lot of people bought houses the last couple of years with the notion that they're going to refinance. Mm-hmm. But if they're not ready to do so, they might miss their window. So what we're helping our clients with is becoming refi ready. We're having the conversations with our clients saying, hey, listen, this is what it looks like. This is your picture. Right now, the rates aren't where they need to be, but let's have a discussion. Where do they need to be for you to be, wanting to pull the trigger? And when that day comes, can I call you?
Yeah.
And will you be ready to move quickly? Because we've proven now twice this year, the rates dipped for a day or two, and then they went back up. Mm-hmm. Now, is that going to be the trend? Possibly, but nobody knows the future. Everyone's like, oh, the rates are going to go down. They're going to go down. And I said it here myself.
Yeah.
But they did go down. Now they're back up. Are they going to go down again? Possibly, more than likely. Mm-hmm. But how long will they stay down for? I don't know. And a lot of the talking heads said that, rates were supposed to be down last year. And a lot of people did these 2-1 buy downs where now they're going to have a payment that goes up very much so. Mm-hmm. And they're going to might be in a bit of a pickle.
Sure.
Right? And so what's their opportunity? They want to get refi ready or purchase ready. If you're looking to buy a house and you're saying, there's 67% of the people said they're waiting for rates to lower in order to buy a house.
Wow.
Well, that's 67% of home buyers, potential home buyers, said they're going to wait till the rates go down. What do you think is going to happen when the rates go down?
Flood the market.
and the ones who are ready to purchase, they've given their docs, they've been pre-approved, or with us, they're secured approval letter. Mm-hmm. There's going to be competition for those homes again. Prices are going to go back up. Yeah. And rates, yes, you might pay less in the rate, but you might pay more in the house. But if you're not ready to move, you're going to miss that home or you're going to miss that rate.
Yeah. Sounds like the bottom line is have those conversations with your loan officers ahead of time. Don't let them be the salesperson. Force them to be the consultant so that when the time happens, you can pull the trigger.
Right. There's a lot of loan officers who are order takers.
Yeah.
You tell them this is what I want, and they'll give you just that. You missed out on all the opportunities to work with a professional that's going to tell you, hey, look, here's some other options for you. You can choose whatever you want, but at least let me put the options and explain them to you and put them in front of you. Mm-hmm. And that's an advantage working with a pro. We kind of circle back around to the loan officer. Loan officer is an important person. They're not just a good loan officer is not just an order taker. They're going to look at the cost and the benefit of doing a loan. And the good loan officer will have the data for them and present it to them and say, listen, if you go this route, this is what it looks like. If you go this route, this is what it looks like. Which way do you think you want to go? How long are you going to be in the house? How do you want to pay it off faster, or is cash flow more important to you?
Right.
This is the conversation a true professional should have with a home buyer or a person doing a refinance. Mm-hmm. Maybe that person says, hey, listen, you have all this other debt at these high interest rates. Let's look at what your actual blended rate is and figure out if a cash out refinance might serve you better than doing just a rate and term where we just lower your rate.
Yeah.
Maybe we take a look at their equity and say, I have a solution for you to increase your cash flow, decrease your total interest you're going to pay, and improve your situation overall.
Mm-hmm. So they're preparing you for those moments of opportunity or big moments in your life where you could use some cash flow.
Right.
It's pretty awesome advice.
Everyone's a little bit different.
Yeah.
So,
awesome.
Yeah. So, here's my advice to everyone out there. If you are in a mortgage with a super low interest rate, but you have other debt, you need to look at the whole picture. Can I improve my total picture by having, taking a look at doing a cash out, or maybe selling the house, paying off debt and buying a different house? These things are all possible. Rates are coming down. If you're looking to refinance, or if you're in a high interest mortgage right now, when I say high, I'd say over 6.5%. Mm-hmm. It might be time to refinance, or it might be getting close. Maybe you have a number in mind. Work with a true professional who understands and can give you options. We have those here. If you don't already have someone in mind, we have those here. There's going to be a link down below to a short form, and maybe we can hook you up with a loan officer here. And this is not just an advertisement for that. I truly believe that if we can help people, even with their own lender, improve their situation, it helps everyone else out.
I couldn't agree more.
Yeah. So do you have any other thoughts or on this one?
I mean, I think you pretty much nailed it, and I appreciate the advice.
Cool. Well, thanks for joining us today. Please do not forget to like and share. That's really important to us. Ask us questions down below and reach out if you have any questions or if we can help you in any way. Thanks again. We'll see you next time.